All right, guys. Hope everyone had a good weekend. Just want to do a quick mic check. If you guys can hear and see the screen, can someone put a 111 in the chat? If you guys can hear and see the screen, can someone put a 111 in the chat? Just want to make sure the mic is working. All right, good. You guys can hear. All right. If you are new to this call, maybe you just got the system or you've never been on this call before, can you put a 222 in the chat? See if there's anybody that's new that's on the call. All right. How these calls go is I'm going to go over the Slingshot strategy. I'm going to talk a little bit about the boss money template. I'm going to show you guys examples of how this template can be used for quick scalps and for some, forms of intraday trades. We're going to talk a lot about liquidity. I'll show you guys where entries and stop losses can go based off of your analysis. And then I'm going to show you guys how I analyze the chart using the open order concept. All right, so hopefully you guys will get some value out of this. Yeah, so let's jump right into it. Kind of in a weird mood, so I kind of want to just see if we can hop in and get in a groove because I'm in a little bit of a funk today, but we're going to make it work. All right, so first things first, let's talk about how the market works. If you are new to this call, if you've learned how to trade based off of support and resistance, trend lines, or any types of, you know, um, patterns, let's kind of throw that out of the window and just kind of learn this concept first, and then you'll notice that those patterns and what you do already know will actually make more sense. All right, so let's take it to this little diagram that I have here, and basically what I want to introduce you guys is just how the market actually works. Basically, what the market is the market is basically made up of the banks or the algorithm, however you want to call it, taking and creating liquidity. And what I mean by that is if you know what a downtrend is, I'm pretty sure, all you guys should know what a downtrend is. That's when the market is making lower lows and lower highs. Every time the market makes a lower low, that is the algorithm or the bank taking liquidity. Now, what I mean by that is when the market is in a downtrend and we have these pullbacks or these retracements, in these retracements, we have retail traders that are buying against a trend. These traders have found some areas of support, maybe on lower time frames, and they're buying against the overall trend. And when that happens, the banks know that these traders who are trading off of these areas of support, they know that they're going to protect their trade by putting a stop loss below these lows. All right. So if there's stop losses below these lows, right, and the market is in a downtrend, the banks are going to enter up high. And then what do you think they're going to do? They're going to pretty much stop out all these retail traders to continue price in the trend it's intended to go. So the goal is going to be to actually trade with that algorithm and not trade with this, what we call dumb money, and trade with the smart money, the traders who are actually trading to take out these orders to continue that trend. Now, another thing a lot of people don't realize about the market is that in a downtrend, when the market pulls back, if you can't see it on the higher time frames, if you go to a lower time frame, the market will pull back in a lower low, lower high formation, which means there's going to be some bullish and bearish candles in that pullback. Below each one of these peaks are also orders. There's actually buyers who are buying in this area as well. So they're leaving, liquidity or their stop losses below these peaks along with this one at the bottom. So this whole area, this whole pullback is basically nothing but a huge liquidity pool. And the goal is just going to be is how far is the market going to pull back? So when you go to strike and take out this liquidity, you know where to enter the trade so you can take that ride down so the market can continue that trend of lower low, lower highs. Now, that's the main thing you have to understand about the market is that the market will basically create liquidity, take liquidity, create liquidity, take liquidity. We want to be on the end where we're taking the liquidity. Okay. Now, in an uptrend, it's basically the opposite. The market makes higher highs and higher lows, which means When the market pulls back, it's the same thing. This is the bank creating liquidity. When the market continues and takes out this high, that is basically the market taking out a retail trader who bought off of this area of resistance. Excuse me, sold off this area of resistance, which means if there's a seller in this area, there's a stop loss here. All right. If there's a seller in this area, there's a stop loss here. If there's a stop loss here, the bank's going to do what? Enter down here somewhere or somewhere below this area of resistance and stop out these retail traders who are trading against this overall trend. All right. So same thing in an uptrend, the market's making highs, lows, highs, lows, highs. The market will pull back in a lower low, lower high formation. So this entire pullback is one big liquidity pool, and there's money above each one of these peaks. All right. There's money above these peaks. And if there's money above the peaks, the banks will enter and take them out. The market will go up in a higher high, higher low formation. It will pull back in a lower low, lower high formation. And then, like I said, to continue the trend, the bank is going to take out all these levels of liquidity where retail traders sold against the uptrend. All right. So that's the main thing that you have to understand about the market. And this type of price action happens on every single time frame. So if you see huge swings on the daily time frame, the same thing is happening. And then if you see the market, making lower lows and lower highs on that daily and 4-hour time frame, the same process is happening. So you basically can get a directional bias just based off of what phase the market is in. Is it taking liquidity or is it creating liquidity? What phase are you trading? So if you're trading with the overall trend or are you trading a pullback that looks like an uptrend on a lower time frame. All right. Now, another thing that I look for when I'm looking for an opportunity is I look to see where that break of structure is, whether I'm trading in an uptrend or if I'm trading in the downtrend. If the market is taking liquidity, that is a break of structure. So if you spot a break of structure while you're analyzing the chart, what you're going to do is you're going to mark that break of structure by identifying the buyer. Now, the buyer bought off of this area of support, and we know that the seller, right, is the one that actually took out the liquidity. So if you mark this as a low and a high and a break of structure, what you can do is write BOS for break of structure. So that way you hold yourself accountable that you identified that phase in the market. Now, this phase in the market, when the market breaks structure, is what I call a push phase. And a lot of the times when you enter in this phase or you enter this breakout, sure, you may go into profit if you catch it just right. But a lot of the times you'll eyeball this and you'll enter right in the middle of it, right? You may go into profit a little bit. You're excited. Your phone is blue. And then all of a sudden the pullback comes and you're like, shit, I'm in drawdown. The reason why that is because after the break of structure, the next phase is for the bank to trick buyers off of another area of support, just like within this consolidation. So if you make it a rule to not enter the trade in a push phase and to wait for the bank to create the liquidity, then what you'll do is you'll mark that area of interest at an area of resistance, right? So if I know that there's money below this low, then I'll identify it as an RTD. An RTD means a reason for the market to drop, reason to drop. The reason why I do that is if I hold myself accountable, I know that I want to trade towards this low. And I'm going to hold it, to me that I know that in this pullback below these lows or in this entire move, that there's liquidity within this move as well. And I can trade to one of those orders depending on how big the move is. But the overall goal is to get below this low to continue this trend. All right. So this is the slingshot pattern to the downside. You're going to be looking for a low, high, breakup structure, next phase, trick buyers into an area of resistance, identify the RTD and the orders within this move, and then spot an entry up high to trade towards the RTD. All right. So this is your pattern for a move to the downside. All right. To the upside, same exact thing. You're going to see the market making higher highs, higher lows. What you're going to want to do is identify that break of structure, because if you see a break of structure, we know that that is a push phase. All right. If the market breaks above a high where we stop out a retail seller off this area of support, This is your break of structure. Now, if you get a break of structure, that means you have a mixture of sellers and buyers. This time the buyers stopped out the sellers. So we'll write BOS here. I'm going to show this to you on the live chart. All right. After the break of structure, the next phase, now I don't care if the market goes all the way up here. The next phase is for the bank to do what? Trick sellers off of an area of resistance, right? To create liquidity. Now, once the bank creates that liquidity, above this high will be what I call an RTP. You can call it an order, whatever you want to call it, but I call it a reason for the market to push. Reason to push. That's what RTP means. Once the market pulls back to an area of support, I'm going to be looking for maybe some form of inefficiency or even an order block, but I'm looking for the market to pull back, basically giving me a discount so I can spot an opportunity to trade toward this order and to fill all the orders that were within this move because the market did pull back. All right. So your entries are going to be somewhere in this area trading towards the RTP, right? Your stop loss is going to be below the previous structure conservatively, below this structure, actually below this structure aggressively, and below this structure conservatively. So this would be an aggressive stop loss. This would be a conservative stop loss above that high. And as you can see, the risk to rewards wouldn't be that bad. And then the market will go out to take out that liquidity. But that's what you're going to be looking for on your chart, guys. These types of patterns, right? This type of pattern will give you an opportunity to get a directional bias on the higher time frame. And then on the lower time frame, you'll use this same type of pattern to actually enter the trade. And I'll show this to you on the live chart. All right. So let's look at, I guess we can look at US 30 or maybe EUR USD. I like looking at US 30, but lately the market has been kind of crazy. So, and we've been bearish. So I pretty much can only show you bearish examples, but I'm going to go to the higher time frame and I'm going to show you what I mean by just spotting those breaks or structures and, get an understanding of, why the market, moves the way it does. All right. So this is the daily time frame. So I'm going to show this to you on a larger scale, right? Notice that the market is in the downtrend, right? And as the market pushes down, we have these pullbacks, right? When the market pulls back, this is the bank creating liquidity. So we know that if the initial pull came from down here, right, we know that there's liquidity below this low, right? So look at how I can draw the pattern up, right? So notice we have a low, a high, and then a break of structure, right? So right here, I can identify the buyers. If I can get that line to stay, I can identify the buyers, right? I can identify the sellers, right? And I can see the break of structure, right? So what comes after this break of structure? Well, price has to run into an area of support. See, this is resistance. This is support. And what is the next phase after the break of structure? To create liquidity by tricking buyers in a what? And I go to the 4-hour time frame so you can see it. In a higher high, higher low formation, right? So if I know that there's money below this low and in this entire move, right? And the market has pulled back to an area of resistance. And then I go back to the daily so you can see it a little bit clearer, right? Then I know that if I enter high, that the bank is going to come down and take out the liquidity below the low and within this pullback, right? And look what happens. If you were to enter, right, on this bearish candle, the market starts to come down, taking out liquidity within this move. The market does pull back because it's going to actually move down in a lower low, lower high formation. So the market does pull back, right, creating liquidity below this low. And as you can see, it's starting to pull down past this low, right? So once this area of resistance, of support gets broken, right, now we have another break of structure. So I can literally just redraw this. Right, I'll get rid of this. Actually, I'll move this to this area, right? And as you can see, now we have a low, a high, a break of structure that runs into an area of support, right? So if the market just took liquidity from buyers and ran into support, what is the next phase? To trick buyers back into what? An area of resistance. Notice the market does pull back, right? In a lower low, lower high formation. You see the bearish candle? So that means there's money below this area, and below these wicks, right? So when the market pulls back, the bank is going to enter up high. And what is this going to do? The market's going to continue to trend to take out all the liquidity within this move and the liquidity below these lows. And as you can see, if I go to the 4-hour time frame, you can get a better view of it, right? And what does this pattern look like? Look, low, high, break of structure, next phase, trick buyers. We know all the liquidity is below all these peaks, right? Below the peaks. Your entry could be up here on this wick aggressively. You can wait for a break of structure and an entry here. And as you can see, the market comes down and it takes out all the money between here. And I'm pretty sure because there's equal lows down here, we may end up pushing down and stopping out this area here because we are still bearish. All right. Now look at this pattern. Low, high, break of structure, trick buyers back into resistance. Look at the diagram. Low, high, break of structure, trick buyers back into resistance, entry, take out the liquidity to the downside. All right. And that's what I mean. Now, this is me showing it to you on a bigger scale. You can use this to get a direction of bias based off of what you see on these higher time frames, right? If we look at the daily, right, we have a good idea of, actually, that's the weekly. If we look at the daily, we have a good idea of why the market is going this way just based off of this pattern, just by reading the language leading up into whatever's going on in this downtrend. We know why we're in this downtrend because this move created liquidity and this move is taking it. All right. So if we go down to, the 5-minute, 15-minute time frame to touch a trade, we know that we want to trade to the downside because this process is bearish to take out the liquidity that hasn't been taken out yet, right? If that makes sense to you guys. All right. So this is me showing it to you on a large scale. Now, in this leg, we can do the same exact thing. All right. So I'm going to clean the chart up a little bit and redraw it, right? Because now we have a directional bias just based off of what we know about liquidity, right? Low. Gosh. Why isn't this giving me what I want? All right, here we go. All right, low, high, break of structure. Just read the language. Trick buyers. We know why we're bearish. This is on the daily time frame. Now let's go down to, let's say, the 30-minute time frame, right? And let's look at, I guess this was Friday, right? So we see that the market is doing what? The market is making lows, highs, right? Or high, low, right? It's making lower lows and lower highs in this price action. So our directional bias should be bearish, right? Until we get any type of, breaks of structure to the upside, which there's just no signs of it, right? So say leading into New York session, we decide to check what phase the market is currently in. Well, leading into New York session, we can clearly see that the market is in a push phase. The reason why is because if you look in the past, the market did pull back. So let's just draw up the pattern. What do we see from this area to this area? What do we see? Well, I see a break of structure, right? Using the same exact pattern that we used overall. I'm going to zoom in on it so you can see it, right? We have a low, we have a high, right? And this is before New York session. We have a break of structure here. So where's the money? The market did pull back. It went up, down, up in a lower, low, lower high formation. So where's the money? The money is below here. This is your RTP, right? Right there, right? Now notice market does come down, does not break this low, and then it pulls back again, right? And then the market pulls down and breaks below this low. So say we're not in the trade yet, and we see another break of structure, right? So now we have RTP, BOS, right? We can get rid of this because now we have a low, a high, a break of structure, What is the next phase after the break of structure? To trick buyers back into what? An area of resistance, feeling some form of imbalance. Now, if we know that there is money below this low, and we know that the market pulls back, rejected this high, we didn't break above this high, and we are in a downtrend, right? Then where's your opportunity to trade, right? To the downside. So we're on the 30-minute time frame. So right here would be your area of interest, anywhere along this wick. If I go down to the 15-minute or 5-minute time frame, I'm going to go down to the 5-minute, right? Just so you can get a better view of this. Do you see how we have that pattern? Look, low, high, break of structure, next phase, trick buyers into an area of resistance, right? Feeling imbalanced. There actually is an order block up here, right? So now, what do we want to see? We want to see some type of bearish candle. We have a thick bearish candle here. We have an engulfing candle here. Right here could be your entry, right? You can enter the trade on that candle. Stop loss will go above the previous structure, right? And then our goal is going to be to target this area here first. And as you can see, if you enter the trade here, that comes down to almost 1,000 points, around 979 points. Now, if you look at this overall from the higher time frame, you know that you can stay in this trade because if you look to the left, right, on the higher time frame, if you remember what you looked at overall, we had this low, this high, right? We had this break of structure, we had this pullback, and remember, all the liquidity in this pullback is what the bank is targeting. So we're down here, we're right here. There's money below this wick, that wick, this wick, and this wick, right? And if you just stayed in that trade, you can actually end up making this area of support your take profit. And as you can see, the market comes right to it, to the wick, right? To that area of support. So we know there's liquidity in this pullback, but you can't forget about what you saw overall, right? I'm going to show you again so you get a good look at, how this works, all right? Look at the daily time frame, guys. One more time. Look at the daily time frame, right? Why are we going this way? We're going this way because we have this low high break of structure, right? We know that the next phase is to trick buyers, and this already happened. So we know why we're going this way. So when we go to trade on the lower time frames, we know we're bearish because we're taking out the liquidity to the left. And let's go back down to the 15-minute time frame, right? And not forget about what we saw on the higher time frame. All right. Let me go back to so I don't lose my spot. All right. So we were in this area right here on Friday. So remember, right? Everything below this area here is money, right? All of this is money. All of this has already been stopped out, but all of this is money for the bank to trade toward if the market is going to continue based on what we know about the higher time frame, right? And as you can see, once you enter the trade, right, off this pattern, right? And I'm going to draw it up one more time so you can see it, right? Once you enter the trade, we know that we're going to keep going. Gosh, why can I write that? Show that. Right. Once you enter the trade in this area here, we know we're going to keep going because don't forget about the higher time frame. There's still money in this area that hasn't been taken yet. All right. Do you see how that works, guys? Right. And this is what you have to understand about the market is where is the money and how do I trade toward it? What phase is the market in so I know which way to trade, right? So imagine if you were analyzing the daily time frame, right? And you saw this huge push to the downside, right? We know that we're bearish, right? But we did run into support. So if we run into support and you start to see, bullish momentum or you see a break of structure like within this candle, you see this huge bullish candle, we know what the next phase is because you've just been taught it, right? After the break of structure, next phase is to trick buyers. So obviously on the daily time frame, we're going to be bullish because we're doing what? We're going to be tricking buyers. And everything on this side of price, I'll go to the 4 hours so you can see it. Everything on this side, right? These peaks, right, where people sold is going to be liquidity for the bank to take. And as you can see, price goes above this high, we pull back. And then what does the market start doing? It starts creating liquidity, right? By pulling back in this downtrend. And it's going to start taking out all the liquidity from people who sold this close to this area of support, right? See how it's taking it out, right? See how it takes it, creates it, takes it, creates it, and just keeps taking until it runs back into this resistance. Because, in this leg, there's buyers and sellers. And when the people sold this close to this support level, not knowing that it's not going to continue, their stop losses were above these highs. And the bank is coming up to take it. And you would know that it's going that way based off of the pattern. You see what I'm saying? Like, we know there's money in this move, right? We know there's money in this move, right? Excuse me, I'm looking at the wrong thing. There's money in this move, and that's the reason why we're going up to take that money. All right. Let me know if you're on the same page. You can say something in the chat, but this is what these little things are what are not being taught before you learn trend lines, support and resistance, and head and shoulders, and M pattern, W pattern. This little thing about the market you guys don't know yet, right? But once you start to see that, then your patterns will start to make more sense. All right. All right. All right. So let's look at some more examples. We'll look at EUR USD on the chart, because honestly, this uptrend is you guys really good examples. All right. So let's look at today on EUR USD. All right. I didn't trade this today, but I actually saw this, but I can't mix indices and currency when I'm trading. But look at the market in this uptrend. Actually, let's go to a higher time frame so we can actually see what the market is doing. All right. So look at the market here. Right. We're on the daily time frame. Right. And we had this downtrend, lower lows and lower highs. And notice these lower lows and lower highs are doing what? They're breaking structure. They're taking liquidity. Right. Liquidity was taken here. Liquidity was taken here. Right. So this pushed all the way down, stopping out all these buyers, right? And then we ran into an area of support. If I draw a line here and zoom out, right? Let's see. Actually, I can't even zoom out. Let's go to the weekly, right? So you can see it. See how we ran into support? Look, white lines, white lines. We ran right into support, right? So basically what we have here, right, is we have, now I'll go to the 4 hour, right? We have a break of structure here, right? So if we have a break of structure here, what is the next phase? To create liquidity. And it's already happened, so we're just reading the language. Look, this is on the 4 hour time frame. The market is making higher highs and higher lows, right? So we had a huge swing, right? So here's your high, here's your low, and we're continuing to make what? Higher highs and higher lows. The bank is still creating liquidity, right? So we know what phase we're in. We're creating liquidity, right? Hands down. So if that's the case, right, what's today? This was today. We'll go to the 1 hour time frame, right? This was today. So look at the price. All right. Why is the market right here? What happened over here to put the market here? Let's read the language. Well, the market made a high, a low, and we had a high. So that's your break of structure. So we're just going to draw the pattern now, just like this, just like this. All right. Where am I at? I'll even write how I would do it. All right. This is BOS, right? So we have your high. We have a mixture of our sellers and our buyers, right? Buyers stopped out the sellers. So right here, we can't chase, right? This is the reason why we don't trade the breakout, because what is the next phase after the break of structure? If this structure runs into what? Resistance. Look, resistance, break, retest, resistance. The next phase is to trick sellers back into what? An area of support, right? So notice above this high is an RTP, right? And I'm just reading the language leading into today through Thursday, Friday, and this Monday. So as you can see, we're down here respecting this area of support. I know there's money up here. And what did we say? The market pulls back in a lower low, lower high formation. So we can read this and see that the market did come up and up, and it stopped out some liquidity below this line, leaving money above this high. Now, the stuff that's already happened, right? Leading into New York, we had a push up. So we know that these orders have been stopped out, kind of jumping the gun a little bit, right? But even looking at what's going on right here, what do you see again? I'm going to get rid of these lines so you're not confused. I see another break of structure. Price went above these highs, right? Price went above those highs. So what do you have now? You have a high and a low and a break of structure. So what is the next phase after price breaks above a high, right? And it has to run into resistance. I can draw a line here. Look, resistance. We're still resistance, still resistance. Next phase is to do what? Trick sellers back into an area of support, usually filling some imbalance. Now, where's your RTP? Your RTP is going to be over here now, right? Your reason to push is going to be here, right? So look, this is the New York session. The market pulled back to this area, right? To this area of support. If you were savvy enough to get your entry down here on the lower time frames, look where the market goes, right? I'm gonna go down to the 15-minute time frame, right? Look where the market goes. It goes up to take out the orders above this high, right? Came down, and this price action is crucial because remember what I said, you guys learn M patterns, but you don't understand structure, right? So a lot of you guys would have saw this and would have been like, oh, this is your M pattern. I think I'll sell, right? You'll sell and then you'll lose because that's just the manipulation in the market. They know this is an M pattern, right? The money is above here. Unless we break this trend line, there is no reason to sell, right? If I can do this, right, there's no reason to sell, right? We enter here at this area of support. You will get some manipulation. The market will go up, come down back to your entry a few times. That's just something you have to weather. But your entry should be down here, maybe on this engulfing candle, right? Right here. Maybe you entered here, right? That's fine. If you entered here, stop loss will go below this low. And then the goal is to take out the RTP. Now remember your higher time frame analysis. Everything above this level is an open order. There's money above these highs. So if you see that, let me go back to the 1 hour time frame, right? If you see that we haven't broke structure, right? This is your RTP. Where's your next level of resistance? Everything below this wick right here, especially this wick, everything below this wick is a closed order, and we're bullish, right? All these orders below this have been closed. This wick, that wick, and whatever we can see to the left, we got to go to a higher time frame to see it, right? All this is open orders until we hit an area of resistance. Right here is your order block, right? So all of this are open orders, right? There's money and stop losses to be taken out. And as you can see so far, and I actually think it's going to go higher, we've taken out all the orders above this wick, all the orders above that wick, all the orders that were above this wick from that pullback. And that's how the market works, guys. All right. So like I said, we'll go back to a naked chart, show you one more time, right? Just a little bit faster this time. All right. Look at the overall. Sometimes you do have to go to the weekly, right? To get an idea. We had a push to the downside that broke this peak and that peak. If I draw a line right here, you'll see that it went below it. See the wick? It went below it. That's your break of structure. Look to the left, we hit resistance. When the break of structure hits resistance, the bank has to do what? Create liquidity, right? So we know that we're creating liquidity. Next phase, go to the 4 hour time frame, right? Now, if this is your break of structure, we know why we're going to the upside, because in your diagram, what comes after the break of structure? We trick buyers. So what are we doing right here? We're tricking buyers. And when the market pulls back, what does it pull back doing? It pulls back doing lower low, lower high formations. This is just doing it on a larger scale. On a larger scale, look, lower low, lower high, or if you look at it on a smaller scale, look, not lower low, higher high, higher low, I meant to say, right? Higher high, higher low, higher high, higher low. And then we have a big swing, higher high, higher low. We did not break below this low. We're still bullish, but this phase is creating liquidity. So just remember that. This whole phase is us creating liquidity based on what we saw on the higher time frame. So don't get me wrong, we're not really reversing yet until we break some form of structure, which, if you look at this on a higher time frame, right? Actually, I probably have to go to the daily, right? Structure is right here. We got to break all of this. We need to break above into this zone to be bullish. So we're still bearish until we break above this. This is just a pullback because we could be retesting this area to go lower, or we could be, moving up to stay within this zone to go higher, right? We really don't know yet. Do you see what I'm saying? But we know what phase this is because we took money from buyers, and we ran into a major area of support. We have to create liquidity to go lower, or we have to break this level to go higher. Do you see what I'm saying? And that's what you have to understand about the market. And once you know that, just go down to the lower time frame and then read the same language, right? Read the same language. Look, right? High, low, high, low. Break of structure. What is the next phase? Trick sellers. Where's the money? Above this wick. And then remember, it's above this wick, that candle. There's money in this whole pullback. So once it reaches that area where it wants to go up, it's going to go up and take out all the money that's here. As you can see, the price action took the money here, and it's going to eventually make its way up here. See how I'm saying? It comes back down, takes out money below here, and it comes up, eventually taking out this wick right here. This wick right here takes this out right here, right? We take the money, we create the money, right? Back into support, right? Same exact thing, right? High, low, break of structure, back into support. Now the money is above this wick, entry down here, and you take the money. That's how the market works. And remember, you can't forget what phase this is. We're just creating liquidity based on the higher time frame to get a directional bias. And then we're reading the language on the lower to make sure that we're still trading in that bias in the direction, right? We're not selling because if we sold, that would mean we're getting ready to take out the liquidity that we created and we're not done yet. You see, there's no signs of being done yet. So we got to stay bullish regardless of this M pattern right here, right? Or this M pattern right here. We're still bullish until we get breaks of structure. All right. All right. So I'm hoping you guys are seeing that because, that it's very manipulative when it's live. And trust me, you will get stopped out. You will change your bias, but then it starts to make sense when you see the market going your direction. Like, oh, wait, I was right. All right. All right. So hopefully that helps you have better understanding of just how the market works in general. Now, with the system and understanding how the market works, I'm going to show you how the system can give you confirmations based on what you see. All right, so let's go to, I guess we can let's go to US 30. Actually, we're on EUR. I'm about to stay on this one. All right, now, if I'm analyzing the chart and I'm bullish, right, and I see that this is an area of interest or this is an area of interest based off of that pattern. So say I did this, right? We'll go based off of, I guess this was Friday, right? And I saw that the market pulled back to an area of support and I'm looking to trade towards this order. So if I did the same thing on the 15-minute time frame with the system, all right, we'll put the boss money on here, right? Notice where price is after these swings. All right, so look, it's kind of hard to do it. I guess I can do it. Well, we'll do it this way, just so I don't lose my space. I'll mark this area because I won't be able to spot it. Right, let's go to the 1 hour. All right, so this is the 1 hour, right? There's no arrows there. right? We know the market's in an uptrend, right? We know this is a break of structure. So look, high, low, break of structure, next phase, trick sellers back into an area of support. So if I'm at the chart and this is the area of support that I'm looking to trade off of, and I need added confirmation, right, from this zone. We're not over here yet. Beginning of New York session is in this area. I'm looking to see, are there arrows pointing in this direction of my bias? And then I'm looking to see, in this area, are we below the channel or close to it on lower time frame? Because this is the 1 hour. And I want to know, are we above the 200? And we are above the 200. So if I go down to the 15-minute time frame and I look for that same area of support, I'm not worried about the white arrows. The reason why is because we are above the 200. I know we're bullish. These white arrows mean nothing to me. We haven't had a breaker structure yet. But I do want to see, do we have black arrows, which are bullish arrows pointing in the direction of my bias? And look at the confirmations that are there, right? Look, confirmation, confirmation, right? We're right here. Confirmation, right? We see that the market is bullish off this zone. The system is agreeing with that analysis. If I go to a 30-minute time frame, right? You see, I have a nice arrow agreeing with that analysis. The market is going to do what? Eventually come out and take out this order. And as you can see, we have confirmation here, we have confirmation here, and the market goes up. All right. Let's look at Monday today. We had another break of structure, right? Notice there's no arrows here down here. I'm not relying on the arrows. There's no arrows here, but I do see a break of structure. If I want confirmation, remember I'm on the 30-minute time frame. The next phase is to trick sellers into an area of support. This is the zone I'm looking to trade off of. Let's see if the system agrees on lower time frames. If I go to the 5-minute, look, I'm not worried about the white arrows. Why? We are above the 200 moving average and we are bullish, right? But what do I want to see? Look, black arrow, black arrow, black arrow, agreeing with my analysis, right? So I can enter here, put my stop loss below previous structure. I have to weather this storm. It sucks if I enter that soon, right? If I wait till, let's say, I guess 1500 is technically New York session, not 1400. So say I waited to 1500, right? Look at the arrows right there telling me to enter the trade. If I enter here, my stop loss has to go below previous structure. Below this structure is aggressive. Below this structure is conservative. Now, as you can see, where's the market end up going? It ends up going up. Unfortunately, it does pull back, which is what the market does, right? But it eventually goes to the upside. And don't forget about your higher time frame analysis, right? Remember what this looks like, right? We're not trying to sell. If you forget what's going on the higher time frame, it's really easy to sell because it looks like a sell on these lower time frames. You could easily see this M pattern and want to sell, and then totally forget that nothing about the 1 hour says sell. Nothing about this price. Look, we're even above the moving average is yellow. Nothing about the system is telling you to sell. It's all about that higher time frame, and then remembering where your RTP is, right? If we get a break of structure, right? If we get a break of structure and we pull back, we know that there's an RTP above this high, and our goal is to trade towards that. That's all we want to do is we want to trade towards that RTP. We don't want to trade for anything below. And as you can see, and even if this arrow pops up, we're not trading this arrow because why? We're above the 200 moving average. Market goes up, right? That's how the system, that's how you can, benefit from the system along with Slingshot. I told you guys, in the video that when you add Slingshot to Boss Money, it is deadly. It's just how you use it, right? If you use it with Slingshot and you're patient for these opportunities at the beginning of New York session, then it's pretty deadly. If you're using it to get quick scalps, like maybe on, to me, it's better on US 30. But if you're looking for, one of these moves on the outside like this to catch these scalps, great. Those are you can catch really good trades like that. But it's better when you understand why you're catching this trade right here, right? And if you come to the chart and the market has already impulsed like this, and you've missed this move, then you're not getting another move, below this low for a while. You may get one Thursday, so you may not be able to trade, or you have to wait for an opportunity over here somewhere and catch that on the 5 minute time frame and hope that there's an arrow there to catch it. So, you have to be pretty savvy to catch those trades like that and then feel confident in that trade. But if you understand liquidity along with why the market is, at the bottom of the channel, then you're gonna catch really, really good trades, but you're gonna have confidence in that trade because this happened during Asian and London. So how do you catch this one? And then what do you do during this? You see what I'm saying? Do you catch it up here, on the 1 minute time frame, or are you stuck on 15 minute, 5 minute? You're not really going to catch a trade if you're just sitting there waiting for arrows. You have to understand price action and let the arrows help confirm. Okay. And that's just, my thoughts on that. Now, if you are using the system that way, the confirmations that you get from the system, are pretty vague. All you have to do is look for, all right, this is a good example right here, right? If you were to trade this signal, right, what you want to see is the stochastic below the 20. You want to see some form of a bullish spike if we are trending to the upside. As you can see, the yellow is above the black. I consider that a bullish spike. And then I want to see, is the white line below the red on the TDI? Or if not, is there any type of divergence in that area? And in this area, the white line is below the red. You have all three confirmations. All you'd have to do is wait for a candle to close above the moving average, make sure the moving average is yellow, and you get into that trade. So if you're to enter the trade here, your stop loss can go just a few pips below here or below the previous structure, which would be right here, right? Right here would be aggressive, right? And then you place that trade and go for 30 points or to the previous high. So this would be your previous high. And within that move, that's about 20 pips right there. If you stay in that trade a little bit longer, it's 30 pips. And if you stay in it, the whole go, that's 100 pips. But technically, these are really, really good trades, but you wouldn't know to stay in that trade if you didn't understand, liquidity, and how the market actually works. All you know is the arrow was there and you were able to catch 20 pips and get out real quick. You see what I'm saying? All right. Now, this move on US 30 would probably be like 2,000 points. So, it's worth it on US 30, to catch those. But I just kind of wanted to show you that, the system works well based off of, those quick scalps like that, or based off of, actually understanding structure. All right. All right. So what I'm going to do is I'm going to open up to some questions and then we'll move on to the open order now so you can get an idea of what that's like. All right, so let's see if I can do this correctly this time. Allow participants to unmute. I'm gonna click yes. Can you guys unmute? Looks like it. All right, does anybody have a question? I saw somebody unmute, so I guess I did it right. If you can unmute and you have a question, you can go ahead and ask whoever. Does anybody have a question? I'll look inside the chat.
Yeah. I was just all right there. That big long wick, the black one.
This one?
Go with no, to the right. Today's trade.
Here?
Yeah, right where your arrows that right there.
Yeah.
Right there before the session. Is that an order block? Would you call that order block?
An order block?
That
What,
big
this
long wick.
This wick right here?
No, I'm talking about the one before the session started.
Before the sessions on EU or USD?
Yeah, right there. Yeah, right there.
I don't see a
Yeah,
wick.
right there where the arrow was just at.
Hold on, let me go.
Well, not wick, but the I didn't say
you talking about this one?
Yes.
Right here.
Right to the left. Not the wick. I just meant to say those two. Yeah, right there.
Right here.
The candle. That's what I meant to say. The candle.
Is this an order block right here? I have to go to a lower time frame. I don't want to call it an order block because it goes past that. This price action, this is actually a liquidity grab. This price action goes
Okay.
past this, so I wouldn't call that an order block. I wouldn't unless you're calling like if you're calling this price action here an order block, like I wouldn't call that an order block
Yes, sir.
because
Okay.
it went past it. See how this went below? Actually, did it go below it? Let me double check. I mean, it could very well be an order block, yeah. And then it didn't break below this wick. So I mean, yeah, because technically, I mean, yeah, technically it can be. I mean, we had a break of structure, we broke structure, we came back to this last down candle. And this last down candle was the candle that was the last down candle before price went up and broke structure. So yeah, I mean, you call it order block. This one's just weird because usually it comes within the 50% of it or right at the base of it. And this one went like the whole 100% of the candle, but it never broke. If I zoom in on it, it never broke below it, which is really, really weird. Like it never broke below this last down candle before this breakout. So yeah, I mean, I'd call it, I guess you can call it an order block because it did take out liquidity below the low and then run into this candle. It's just weird that it did not break below this, even the wick of, it didn't break below these wicks and then it still went up. So yeah, you can call it that. Yeah.
Okay.
Yeah. I mean, yeah,
Thanks, sir.
yeah, you definitely could. Because usually the order block is the last down candle before the up move that takes out liquidity or breaks structure. And you know, this is the last down candle that went up and this broke structure. It didn't break structure with a body, which is, I kind of like to see maybe a push up and another push up and a body above this, like the body of the candle. But I mean,
Yes, sir. The
a
week.
breaker structure is a breaker structure, but um, and it's weird. Real time without an analysis, even I would sell right here. I'd be like, oh yeah, it's a double top, and I would lose. So, like I said, I'm human because honestly, I saw this on GBP USD, and I was in a sell, and I closed it in profit. I think in the leg of this, and I was like, yo, that's not right. And then it was going against my plan, so I didn't get back in. And if anybody traded GBP USD, I could have gotten to the buy, and look what happened. Like, look at this. Now I'll show you what I mean because GBP USD, I was looking at it and it was pissing me off because look at this shit. And I'm just, excuse my language, but this pissed me off. Look. So we had a high, a low, a break of structure. I know we're bullish, right? But look at the price action here. Look at this shit. Look, we went up, we came down, right? We went up, and then I saw that we didn't break this high. So I ended a sell right here like a dumbass. Went into profit, and then I saw this wicking back up. I closed real quick, and then I reanalyzed it and saw this pattern, right? And didn't take the buy. And look what it did. Look what it did. Straight up. And I'll show you the open orders on this too, because I even had open orders marked, and I was trying to trade towards this. That's why I say don't trade currency and an indice together because your analysis is all screwed up, right? And this one I kind of analyzed real quick. But look at the pattern. High, low, break of structure, next phase. But this wick right here it just wasn't called for. This is a 30-minute. Like this coming back down here wasn't called for. And the way this looked on the 15-minute time frame or the 5-minute time frame was like actually that was on the 5-minute. It was like idiotic. I mean, look at this. Look at this. It went up, came down, up, came to here, and then started going up, and then came past down this low and then took off. Look at the manipulation on the 5-minute. And I was eyeballing this 5-minute, right? So I sold and I'm like in this thinking, yeah, it's gonna come and take out liquidity below the low. Totally forgot about the trend line. And this right here, like I said, just like EUR, here's your M pattern, right? Even if you sold in this wick, you would have made some money, but if you were trying to hold, you would have lost because of not understanding the higher time frame, right? And I knew that we were creating liquidity. Like I knew it, right? You could see it. This is your break of structure. Here's your swing. Here's your low, just a higher, high, higher low, still creating liquidity until we break above a level. So maybe into this level. Unless we get above this, we're not bullish. This is a pullback. This is still a pullback, even though we pulled back and came back. It's still a pullback because the pullbacks happen in a what? A higher high, higher low formation. You see what I'm saying? It's just
Yes, sir.
manipulative. Do you see that now? It's just
Yes, sir.
manipulative. Yeah, it's just manipulative. Very manipulative, I'm telling you. Right? But
Sir,
yeah,
Thank you.
yeah, you're welcome. All right. Does anybody else have a question?
sir, I have one.
Yep.
How you doing? First
I'm doing all
time.
right. I'm doing all right.
On US 30, on October the 17th, there's on the 4 hour chart, there's a pretty long wick. Would that be considered, even though it was what 6, 7 days ago, that still be considered liquidity block or a reason to get liquidity or go back after it?
I have to find what you're talking about. The 17th. You mean the 18th? 17th?
October 17th at about 10 a.m. Eastern.
Why is my computer not showing me that 17th? Going, oh, wait, there. Right here? This is,
It's at 34,145 price. 34,145
you said
is
a
what it
wick. What
wicked
time?
out at.
What time frame are you on?
The 4 hour.
4 hour. It's weird. It's like skipping over the 17th on the far. It's going from the 14th to the 18th, so I can't see what's the 17th on that.
Um, well, it looks like it's pretty well level across there, but it was just before that. You could even go to the 18th at 10 a.m.
I mean, this is the 17th here, and which I'm trying to figure out which wick you're talking
Right
about.
there.
This
You
one?
got the big engulfing, and then you have
You talking about this one right here?
yes, sir.
Okay, so what were you asking about this wick?
Is that a what you would call an open order, even though it was a week ago?
Is this an open order?
Yes, or a reason
it,
to
it,
push in
it
that direction.
a reason for it to push to the upside? Well,
Yeah, from where we're at now.
yeah, it's an open
Or is
order.
it too far back to get that?
I mean, it's too far back to worry about getting up there, but I mean, it is an open order because everything below this, and I'd have to go to a higher time frame now that I know where that area is. So everything, I haven't got to this part of the training yet, but I'll show you what I'm talking about. So the best thing to do is just draw a line like this. Right. So that's basically equal highs. So everything above, actually, maybe not. That's straight. Yeah. So any wick that's above this line is an open order. Yeah. So this above this wick is an open order because everything that's below here is a closed order. I just haven't got to that part of the training yet, but yeah, these are all closed orders. Yeah. Just like this price action right here, that's already happened. All the orders that have been closed are inside here. So these are all closed orders, which means the market could either go lower and take out these orders, or it has a reason to go higher and take out these orders. Do you see what I'm saying? But like I said, I haven't got to that part yet. Yeah. But that's what I was going to go over next, how to identify those orders. Yeah. All right. One more question. Anybody else have a question? Anyone? Anyone?
Thank you.
Yep, you're welcome. Anyone have a question? Like that. Big black lippy. I don't know. Okay, he already answered that. All right, then nobody else has a question. Let's get into the open orders analysis, just so you can get an understanding of what that is. All right. So on the on your chart, and you can start on the daily time frame just based on what you see, is an open order is basically any order that has not been taken out by price action. Now, we know that in a downtrend, right, market makes lower lows and lower highs, which means if this push phase or this break of structure takes out this low, then this is no longer an open order. Below this wick is an open order, and everything on this side of the market is your open order. So basically, what I told you in the beginning, when the market pulls back, there's open orders inside this move plus here. So if you understand where the open orders are and you have a good idea of where price is going based off of the trend, then you can pretty much have a good idea of where the market should be going and why. Now, the hard part is, and this is the part that I'm even struggling with, is knowing, even though I know that the open orders are above here, not to trade towards those because those are not high probability. The high probability ones are these, which is where today, out of all the days, I found I had the patience to actually wait, even though I did get stopped out on an entry. But and what I mean by that is your open orders are just this. If you're analyzing, right? Let me go to the 4 hours so you can actually see the day, right? This is today, right? So if you're analyzing today, right, no matter where price is, you can see what the bank took out and what the bank left over, right? So if I come to the chart, right, and I'm just use today as an example, right? If I come to the chart and I see that we had this huge bearish candle, right? I know that this move took out this buyer right here, right? Because the market did pull back. There's a bullish candle here, right? There's a break of structure. But this entire move took out orders inside here, and this last push took out the orders down here. So if I draw a line from here to here, right? Or if I just draw a line like this, if I use the crosshair to see, right? I can see that if I just do this, wherever that line was, right? All the orders that are inside here because of this entire move are closed. These are closed orders. Whoever was inside of here that the market pulled back, they got stopped out, which means there's money left over below this wick, right? And you got to realize this wick is lower than that wick. So this is a closed order, right? This wick is lower than these wicks. So these are closed orders. But this wick is not lower than that wick. So that is an open order, right? And it's that tedious. So these are open orders, right? And we are in a downtrend. And there are fairly equal lows, right? So if I come to the chart and I know that I'm in a downtrend, right? I can identify, okay, well, the market, the 4 hour candle is bullish, which means in this candle is taking out open orders on the right side of this candle. So if I go to 30-minute time frame, right? Right? And I'm going to just draw this, move this over, right? I know that there's an open order here, right there, right? Because this was the last push. So the 4 hour candle is doing what? Now notice the market pulled is it came down in a lower low, lower high formation, lower low. This actually did come into this candle a little bit, lower high. So I know that there's money here. But this is the money I'm talking about that I have to understand that if we're in a downtrend that these are low probability orders to trade toward, even though today was a high, it was a really good trade if you took it, but I didn't take it because it was against the trend, right? So we know that there's money above all these highs, right? Above this wick, that wick, there's a pullback. So if the 4 hour candle is creating liquidity, right? You see how it comes up, takes money, creates money. This one comes up past this order, then it comes all the way back down and takes the money from over here, leaving this as your new open order because this wick went lower than that wick. Then we went up, we took out this order, we pulled back again. Because what do we do when we take money? We create it, right? This one went above this candle, right? Look at it. It's just that perfect. Look, went above that candle, then it pulled back again, right? And then this move went above all this price action right here. So if I put the candle here, there was money here, here, and here. So let's draw the crosshair to see if we went that high. And we did. We went above this wick, right? So the money, this move to the upside took out all these orders, right? Now, remember, we're in a downtrend still, right? We didn't break any major structures. So now we get this engulfing candle. Now, where are the open orders going with the trend? Right here. All the open orders are here, right? We're going to use this one, that one, right? We're not going to use the ones in between because this went lower than these wicks. So these are closed order. That's a leftover order. This went lower than that wick. This is a closed order. That is an open order. And then nothing went past this. So if you didn't enter, and this is where I took the trade at. I took the trade right in this area. I think maybe on the bit of this pullback right here, right? Stop loss goes above previous structure. And I'm watching the rejection and I see the market pulled back. So I know that it basically gave me an open order to continue the trend. And as you can see, what did this move do? This move took out each one of these orders. If I draw a line right here, you see how it took out all the orders on this side of the market going with the trend. These were low probability orders. These were high probability orders because it was going with the trend. And that's what I mean by, your open order analysis. Now, when you identify this on the chart, this was later in the day. I think, God, didn't this move happen around, it was close to 3:30? I don't remember when this actually started to move to the downside, but I saw this lining up. I was at the gym. I saw it on my phone and took the trade on my phone because this is where I had intended to place a trade in the first place. My analysis was like, okay, when we come back to that 200 on the 15-minute time frame, we're probably going to sell. The daily candle is bearish. And then it pissed me off because the daily candle went from where? It went from bearish to about this much bullish back to bearish. I mean, it's just some idiotic shit that US Nerdy is doing, but that's what happened, right? So look at the system, right? We'll go to the system, right? Now look. You're gonna go? All right, so look. Let's go to the 15-minute time frame. 15-minute. All right. Do you see how I have that 200 moving average and how the market it'll breach it, but then it rejects it, right? So look, we came up, we breached it, right? But look at the 30-minute. We're still below. We're still bearish. It's the higher time frame, not the lower. We're still bearish, right? We're at the top of the channel, right? And then once we broke this, this is where you draw your box, right? You go to the 5-minute and look at your signal. It's just sitting right there. This is how I entered the trade. Now we are above the 200 moving average, but that doesn't matter to me on the 5-minute time frame. We're below it on the 15-minute, and we're rejecting. We're below it on the 30-minute. We're below it on the 1 hour. Do you see what I'm saying? If you look at this, I can still draw a trend. We're not breaking any major structures. And look at this huge bearish engulfing candle. It all makes sense. We're going to do what? We're going to take out all that liquidity, right? Within this leg, right, which I identified on, the higher time frame, right? If I look at it on the 15-minute, you'll see, right, where my open orders were. So I already knew I had open orders in this leg, and now I have the opportunity to trade toward them. And look what the system told me. The system told me that we're going to trade toward that leg. It told me very ugly because it was ugly price action. I'm not going to lie, like this was ugly. It wasn't like a smooth move, but it basically said, okay, we get a break of structure, we get a pullback. I actually entered the trade kind of in a bad area on the push phase. I entered like right in this area right here. Immediately went into drawdown, but I didn't care because I saw this area of resistance right here. And I was like, if we don't break that, we're good. We pushed back down, broke structure again, right? And once we started breaking lows, then I knew we were going to drop because we were already taking out orders to the left. We pulled back again, wasn't worried, we were nowhere near this high. And then the market dropped, right? And as you can see, take profit I had my take profit down here, but this is how the market works. Very rarely does a market come down this close to your take profit and just give you the money. I knew it was going to pull back here, so I got out once price broke below this area right here. And as you can see, if you go back to this, I had that area marked below this low, right? And it took out the liquidity to the left, and it actually filled this imbalance as well. So that's how I caught that trade. And that's what I mean by trading towards the open orders, guys. All right. And it's not hard to do, but what's really hard to not do is trade towards the ones that go against the trend, which today, if I'd have did it, it would have been an awesome trade, right? If I'd have took that buy, but that buy was going against the trend. I knew the high probability trade would be if we rejected the 200 and we took out the orders going with the trend. All right. So I hope that made sense. Whoever was asking about open orders, somebody made sure I went over this today. But all right, so we'll show you some more examples of this as well. Let's go to I guess we can go to GBP USD, and I'll show you what I mean by open orders on here as well. All right, so let's clean this up. All right. Why does it do that? All right, so let's look at where all the closed orders are, where all the open orders are, and let's look and see how we could have gotten to the trade today. All right, so let's look at the daily time frame, I guess, and we'll look at the biggest push, and this was the biggest push to the downside. We'll analyze why we're over here. So this push down here did what? Let's draw a line. All right, so it closed orders from here to there, right? So we know that below here is an open order, right? Right? So the market did break structure. We did pull back to this area, right? So we know this is a level of support, but we do know that this push right here closed orders between here, right? So we know that this is an open order, right? We know above that high is an open order, right? We had it push down, right? And this is all before today. I'm pretty sure if I go to the 4-hour time frame, yeah, the day starts right here. So we look at this on the daily time frame, right? This push down is lower than these wicks. So, right, everything above this red line is a closed order. So we know that this is an open order, right? But what are we doing? What are we doing? Are we bearish or right now are we bullish? And leading into New York, we were bullish. I can draw a trend line, right? So if all of these inside here are closed orders, then everything inside this side of the price action is an open order. So let's go to the 4-hour time frame. Right? So, right? So I know that above this high is an open order. This red line tells me that everything inside here, right? And that's from this wick. We'll just, redo it. Right? Everything inside here is a closed order. So where are my open orders and what direction does the market look like it's going in? Well, I can draw a trend line to the upside. So look, all your open orders are right here. Right? And this is if you get here before this time. Right there. Right here. Right? You can just keep going. Right here and above here. And we know that everything above this line is an open order, open order, open order, open order, right? So the goal would most likely to be to get up here somewhere as your, long-term take profit, right? There is imbalance up here. So even above these wicks right here, right? You can call these because that's, that's a pullback, open order, open order. So we know where all the money is. We have plenty of orders here and we're bullish because I can draw this trend line. So I'm not really focused on the orders below or on this side of the price. I'm worried about the orders here. So now we can look to see what phase the market is in. We can go to the 1-hour time frame and just start looking at price, right? So the market was making what leading into New York session? Well, the market made a high, a low, a high, right? So there's your break of structure, right? After the break of structure, you can do what? Identify your sellers and your buyers, right? So the next phase is to do what? Trick sellers back into support. This is your RTP. Market did push up. Notice this wick broke above that high. There's another break of structure in between there. Next phase, trick sellers. We did come back to an area of support. So I have RTP, RTP, and then I have all these open orders to the left, right? Even there's one right here above this wick that I missed, right? So if you look at this, right, I have an opportunity to enter down here, right, to trade towards all these open orders. And there's imbalance up here. So say I entered here and I just made pretty much this high, might take profit. Take profit gets smashed. You see how that works? Towards all the open orders. Now, the reason why I didn't focus on anything below here or down here is because we weren't trading in that direction. The market was making higher highs and higher lows, right? The only reason to take a trade to the downside is we broke structure and this continued to drop. And even so, it could probably drop this low and you could still buy. It has to break the trend. It has to break this trend, right? For the market to sell, right? If you look at it, right? So that's how you can identify the open orders. And it's weird because if I had sat there and really analyzed GBP USD, I would have caught this trade the right way instead of, going against my rules and just trying to be overzealous, because that's exactly what I was doing. If you look at this, the market is making lower lows and lower highs, and that's the reason why I thought to sell. But you have to have a break. Even to sell, you still have to have a break of structure unless you sell aggressively. Because even here would have worked, but right here, we're coming off of a level of support that was just too strong. So I'm saying this level was just too strong, right? And that's why I went higher, right? So that's what I mean by open orders. I guess we can look at maybe one more. Let's clean this chart up. What else can we look at? I guess we can look at AUD USD. I didn't trade this or look at it, but let's look at AUD USD. Start on the daily time frame. All right, and just look at where the open orders are. All right, market's making lower lows and lower highs. Right. EUR USD always looks weird, but we're gonna figure it out. So let's look at the lowest point. Looks like we have equal lows right here. All right, so this is the lowest point right here. All right, so let's draw a line from here to here. All right, so open order, and like you can mark these, but we're not anywhere near these, right? We know that there's money below this area here, right? So we're leading into today, right? We'll go to the 4-hour. We're leading into today, and this is the New York session right here, right? So from here, right, and this depends on when you get to the chart. If you get there right at 8 o'clock, read the language until 8 o'clock. But notice right around 8 o'clock or New York session, I guess it says, why did I say 12? I should say 14, but whatever, right? Notice we can read to see, okay, we know that everything above this line is a closed order, right? But we know everything on this side of the market is an open order. So what got closed, what got open leading into New York session? Where's the lowest point down here, right? This is the lowest point, right? So just draw a line all the way across, right? So we can see that we have open order, market went up, came down. These wicks are lower than the wicks in between here. Just mark it up just so you can see what's open, what's closed. That's equal lows right there, right? So this is an open order, actually. Yeah, all this is an open order. But notice we're still moving to the downside, right? This is a 4-hour time frame. And then right around here, we get one more, right? So all this is an open order. And then let's go to the 1-hour time frame to get a better view, right? So everything inside here above the red line is a closed order. Everything below it is an open order, right? We even had this push to the downside, right? And this push to the downside closed all of these orders. Now, there's no reason to trade to the downside because, for one, look how close we are to that area of support. We've already hit it once. We've already hit it twice. There's no reason to sell until we break below this, right? So where does that leave all the open orders at? In this leg, right? So we know that everything above the line, this line is an open order. Everything above it, right? So all these wicks are all open orders. One here, above this wick, right? And then, so forth, right? This went higher than that. So you can draw a line. That's a closed order. Everything above this line is an open order. So if we're down here, right, and we want to trade towards these orders, if the market is trading to the downside, we have to see some form of a break of structure first. So we'll go to 1 hour time, 30-minute time frame, and then what do you see right here? Look, right? Lower low, lower high, lower low, right? And then what do we get? Higher high. This high broke above this wick. There's your break of structure, right? So now I have a mixture of what? Sellers, buyers. What is the next phase to trick sellers back into an area of support, usually filling in balance, right? And then where's your RTP? Above this wick. Now, if I can identify an RTP and I know where my open orders are, where do I think the market is going to go? Towards these orders. And as you can see, if you'd entered on this wick or maybe on this bullish candle, I don't care where you enter at, hard to enter on the wick because, you're still kind of biased. Stop loss will go below previous structure, and then you're in this trade. You can see, you pretty much can tell where previous highs are. It's right here where the open order is. You want to make sure TP gets hit. Draw a line that goes to a bunch of candles. Smashed. Actually, that was still not even enough. Smash to the wick. If you stay in this trade from this entry, or if you got in it down here, either way, it's a good way to be. 32 pips right there. You'd enter down here on the wick, which would have been a nice entry. I mean, that's 43 pips. But that's how you trade the open orders, guys. This one was a little bit tricky because we were sitting at this area of support. Would have been really easy to sell, right? But you have to be able to identify that level was strong, and the only way to be able to see it was on that higher time frame. Rejection, 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 rejection. So like I said, AUD USD would have probably been a hard buy. And then another thing too, this trade would have been going against the trend. So do you let this one go? Because if you put 200 moving average on here, right? Let me go back to 15-minute. Was it 15-minute? Let's go to 1 hour just because this is low. All right, we put 200 moving average on, that's 300. Let's see where that 200 was at the time. It might have been above it. Well, I guess we were above it. So now I guess that wouldn't have been a bad trade. We were running to it, so we did get above it, but we're below it. We're below on the 4 hour, so it still is a pullback, right? We're still pulling back. So we are trading against that overall trend, but all in all, still would have been a good trade. It's just, what do your rules say? I'm really trying not to take trades against the overall trend, but this one would have worked out pretty good. All right. But like I said, live, this is so manipulative. You will change your bias over and over again. So with the open orders, it really helps me stick to my bias, because if I can draw a trend line based off of that price action, then I'm gonna stick to where that trend is. If I can do this, right? If I can do that, unless I get a clean break of this, I'm gonna stick to where I think the open orders, are and where price is gonna go. But like I said, this one would have been a little bit tricky, but it took some patience to not sell, even though we're at this area of support. But that's AUD USD, guys. This one was a little bit tougher to analyze though. All right. But any questions about the open orders? I don't think you guys were muted again. So if anybody wants to unmute, you can ask your question now. Does anybody have a question? Anybody? No questions, guys? Anybody? There's no questions. All right, here's a good example of this right here. You see how we have a break of structure right here? Yeah, there's a break of structure. What's the next phase? To trick sellers. See what I'm saying? All right, we're gonna come down and take that. All right, no questions, guys? Does anybody want to see this on a specific pair? Anybody?
Can we look at gold?
I knew somebody was going to say gold. I knew it.
Of course,
I knew it.
you know I'm going
I
to
knew
say
it.
gold.
I knew it. I knew it. I knew it. Gold wasn't ready. Actually, I took a trade on gold today. I just didn't post it today, but I took a trade on gold today. I'll show you where I took it too. I took this trade on gold. And it's weird. This is the trade that I wanted to buy and ended up selling. But all right, so let's look at gold. Gold was at a weird area right now though. And it's weird. Like I knew it was going to buy from this area, and it's still gold's going to sell eventually. All right, so let's look at gold. I guess this is a daily time frame. We had this huge wick. Draw a line right here. Use your crosshair. All right, so we know that everything below here is a closed order. Everything above here is an open order. We do see that we did break structure, right? We had a break of structure right here. So let's go to 4-hour time frame. Right, we are trending up. All right, so if you look at this, right, this is an open order, right? And right here, this move was a break of structure, right? So we have sellers, buyers. Sellers got stopped out. What is the next phase? Trick buyers, trick sellers back into an area of support, usually filling some form of imbalance. If you could tell there's imbalance in this candle. So you see there's a wick here and a wick here in a space. So we're filling imbalance, right? So right here is an opportunity to buy, and I didn't see that. I wasn't at the chart at the time, right? So from here, and I'll show you why I took a sell, but so from here, right, we know that the open orders are here. We know that this pulled back in a lower low, lower high formation to this zone. So let's go to 30-minute time frame, right? We'll look at the New York session, all right? So notice we pulled back into this area of support. I said the market pulls back in a lower low, lower high formation, which means that there's what? There's liquidity in this move, right? We did pull up. We stopped out all these orders, right? And then we got this engulfing candle right here, right? So this is the reason why I sold, is because we got this engulfing candle, right? And basically what I saw was a push phase, next phase trick buyers, liquidity, and I took a trade right here, right in this area right here, right? And it actually went for quite a few pips. You draw a box right here, go to the 5-minute time frame, all right? This move dropped about 112 points. I think I got out like right here when I saw this cancel. I got like 89 points out of it, but I did take this trade today. I have a video of it. I'll post it. I just didn't post it for some strange reason, but I took a trade, in this area right here. All right. So this is gold. So now if you look at this, right, from the higher time frame standpoint, right, notice there's still orders above these highs right here, right? There's an order above that high. There's an order above this wick, and there's one above this candle right here, right? So look at the pattern. High, low, breakup structure back into support, right? Low, high, low, failure to break, and there's money above here. Look where we're going. We did not break this trend line, so we have a reason to sell. And where are the open orders? The open orders are right here. So what I'd be looking for is either, and it's weird because of how this price action is either a push up to fill this imbalance, closing some of these orders. I don't know if they're going to come way up here, but I feel like we'll close some of the orders to the left. And as you can see, there's an area of resistance right here that the market could come up to. And it'll close the orders above here. And that would be a nice trade. That's if we get that. That's what I'd be looking for.
Why'd you sell it, Jared?
Honestly, the reason why I sold is because right here, when the market pulled back, I saw this breakup structure right here, right? And I saw a low, a high, a breakup structure. Like I said, whenever I see the pattern, I'm just like, I'm trading it. You see? I saw a low, a high, a breakup structure, next phase, trick sellers, and I saw liquidity in this move right here, right? So I technically saw open orders here at the time, right? At the time. And I'm not gonna lie, this morning I had analysis paralysis. I didn't know what I saw today. Like I was so frustrated because I literally did. I was looking at the chart and I was like, I don't know what I see, but I'm trading something. So I traded gold today, and I never trade gold. I have a video of it, and I took this trade because I was like, well, there's money here, money here, money here. I'm gonna get it, and I took the trade. And then it started to pull back, and I thought it was gonna pull back to continue. And then I looked at it overall, and I was like, man, it's not breaking this trend line. You see what I'm saying? But I did take this trade today.
So basically you scalped it today.
Yeah, I scalped gold today. Yeah, pretty much. I don't even know if it's still on here. Look at the top. I had a video of it. Do I have it up there? There it is, right? Yeah, I have it right here. I think this is it. Is this it? Yeah. Yep, this is it. I don't forget how to use the damn. This is it. Let me double check, make sure this is right. Yeah, this is it. This is it. Yeah. I'm trying to figure out how to get it on the screen. Well, keep talking. Is it? Can y'all see that screen?
Yes.
Yeah. So this is the trade I took today. I just didn't post it. I don't know why. But you see how I have a low, a high. See how I have the arrows right here? Once it started pulling back, I closed. So I didn't close over 100, I closed around 80 something points, but that was the gold trade I took today based off these orders. But like I said, like my analysis was correct, but then it just wasn't what I really wanted to do. I did not want to trade against a trend, but when I see this pattern, like whenever I see that pattern I showed you first today, I can't not trade it. Whether it's with the trend or against the trend, I have a really bad habit of just when I see it, I trade it. So like when I see anything that looks similar to this, one of these, I'm trading it. And that's how I caught it on gold. I got lucky today because usually gold does not do what I wanted to do. I would have took the trade and gold would have shot up on me. But that was a trade I took today. I just didn't post it today. But as you can see, do you see how it's still bullish regardless? It's still bullish, whether it's going to go past this wick or not. There's still orders to be taken, whether it's going to take the one at the very top or the orders within this move. All right. So that's gold. And it's just like I said, when you get down to the 15-minute time frame, you see how manipulated this looks? It will make you think we're selling long term, but you forget about the higher time frame. You forget what you see on the higher time frame. You're like, wait, it looks like we're going to reverse, but we're not even close to reversing yet. You see what I'm saying? All right. So that's gold. All right. And I think that's, was it 9:39? We're going to go ahead and call it. We're going to call it. All right. But hopefully you guys, you guys got a better understanding of, how the market works. Another thing that you guys got to really, really take here to is when you're coming to the charts. Like I got a lot of people saying, when do you come to your chart? You have to analyze your chart before the New York Open if you're trading New York, or before London if you're trading London. If you get there right at 8 o'clock or 9:30, you're gonna get what I had today: analysis paralysis. I got to the chart late as crap. I'm sitting here trying to analyze real quick and was screwing up. So get there early. I don't care if you get there at 7:30, or actually 7:30 is not even enough. Get there at 7 o'clock. That way you can really analyze the chart leading into the New York session, because if you have to rush to analyze, you're gonna make bad decisions. And like I said, when I analyzed the chart today, I felt like I didn't know what the hell I was doing until right at 9:30, which especially with US 30, until at 9:30, right around here, I was like, I'm a buy. Wait, that's going against my rules. I'm a sell. Wait, I'm a buy. And then next year, I was like, wait, I'm not trading against the trend. So I don't care if it goes to the moon. And then it goes to the freaking moon. On the day that I would normally take this trade, I would lose this because it's against the trend. That's the day it wants to go. Like right here, I would have bought and then lost. You see what I'm saying? So this trade I definitely got lucky with, but it still was my pattern. So it really wasn't luck, because like I said, if I see it, I'm trading it. Low, high, break of structure, trick buyers, fill in balance, hit an order block, rejection, arrow, I'm trading it. I don't care. Right? We were below the 200. At the time, this was higher probability, regardless of what happened at the end of the day. And honestly, the reason why I didn't chase this, even because I could have chased it, is this one trade hit gold for the day. So I was done after this trade. I had already hit gold. And honestly, I loaded this trade up like 4 positions with 10-cent lot size. So I had literally hit gold on this move and then missed the move of the day. But this move of the day was low probability. And then on my small account, I went and hit this one on my phone. So, and this was what I initially wanted to trade. I wanted to trade with the trend after a pullback, because I knew we weren't done yet. Because the daily candle was bearish and we did not break above the 200 moving average on the 15-minute time frame. We hadn't broke above this yet. So
Jared, on the
Yeah.
US 30, right where you are, you have your channel.
Yeah.
And it's at the bottom of the channel twice. So why would you not take that buy confidence?
At the bottom of the channel twice. What are you talking about?
Okay, right where you are, you have it coming down on support twice, and it broke the channel twice.
Yeah, but I didn't take the buy here, no.
Because it broke structure. So if it breaks structure, right where you have it set up at, you said that you need to see it to the upside of the channel.
Am I right here?
For basic zone to zone, right?
Yeah. Well, like I said, this is going against the 200. Remember in the rules, if you watch the rules, I say if price is below 200, we
sell it.
We sell. If it's above the 200, we buy.
You buy, right?
So I didn't buy because I'm trying to follow those rules. That's why I didn't take it. And even though it went above the 200 and I could have bought, the higher time frame is king. We're still below it on the 30-minute, and we were still below it on the 15. 200 moving average is still pointing down. So even if we break it, we still can't buy here. Momentum was still bearish. You see what I'm saying? So, you know, I could have took this trade. I know there's some people who took this trade today. Normally, I would have took this trade. I wouldn't have took it down here after this pull. I probably would have took it like right here because I need to see a breaker structure and a pullback. So I probably would have took it here. But um, the way this happened, it was just, how do I put it? If you're eyeballing the daily candle, which I was on my bigger screen, the daily candle was bearish. And I'm watching a bearish daily candle do what I hate, do what I hate seeing it do, because it's really hard to predict if it's really going to do it. I hate to see it be bearish and then throw a huge wick and go to bullish. I hate that because it's so hard to predict how far it's going to go. You know, you could see liquidity, but the fact of the matter is the daily candle is bearish, right? And it's just throwing a wick. It's got this huge wick, you know, and it's just going up, and the wick is just getting bigger, and it's going up. And then usually when it's right here, that's when it starts pushing back down again, and you're like, right? And then it went bullish. I saw it on my phone. I was like, the damn daily candle went from bearish to bullish. Son of a bitch, right? So I'm pissed because I know old me would have sold here. I would have been trying to sell right here, and it got stopped out. You see what I'm saying? Now, if I make it a rule that I'm not trading against the trend, right? And I need to see a break of the channel, or I need to see a break of that 200 or rejection of that 200 on a 15-minute time frame, then, you know, I'm going to hold off. And that's basically what I did, is just I held off on it. I kept checking it on my phone. And then when I saw a break above on the 15, I was like, okay, if I see bearish momentum, we should take out liquidity to the downside now. You know, not to mention that the weekly candle is bearish. Now I'm thinking my computer's going to freeze now. Right? I think the weekly candle was bearish, right? So that's going to push the daily. The day is going to push the 4-hour. So, but that's the reason why I didn't take the trade here, is because it was against the 200, right? Yeah, so look at the weekly candle. The weekly candle is bearish, and it stayed bearish. I don't think it ever went bullish. I think it got really weak, but it stayed bullish, which means, you know, it could push the daily candle back down. That's what it did. So, that's the reason why I didn't take that buy. I know a couple people probably took it. You know, I was pissed I didn't take it because it was money, but then I was proud that, you know, I didn't take it because look, it's a pullback back into the trend, and then I moved to the downside. That is probably going to take out this low, right? And there was still money left over here. Like it still could go past this low. So like this could still drop, right? It could still drop and take out this order, that order, and the order to the left, and possibly this order. You know, it could still drop. And honestly, the way it looks structurally, you know, we're inside of this consolidation. We're trading inside this box. So there's no signs of us going above this level yet. You know, look at that. Right? See how there's a high here? We rejected this same high, and it went this low. So we could still go to these wicks. You see what I'm saying? That makes sense. All right. All right. Any other questions, guys? Any questions about the templates? Any other questions before we hop off here?
Can you help? Just because I want to make sure that my template is like yours. Is there possible? And I know that you send it out in the email, but sometimes my templates do not show up like yours show up.
I mean, the only thing that should be different is the channel. If you didn't do the little channel upgrade that I did, then it should be the same. I didn't change any of the settings in the Boss Money template. The only thing I might have changed is the color. The color don't mean nothing though. So yours might be green, but if you use the only thing I did with the channel was is instead of using the envelope, right? I just have two border lines instead of the envelope. So basically what you could do is you'll go to your indicators list, you'll look for where it says envelope, and you'll delete it, you'll highlight it and delete it. And when you delete it, you're gonna go and grab the borderline. So I'll show you what yours would probably look like. Let me look and see what this one is. All right, so yours probably looks like this. I mean, it's not that big of a deal. It's just something that I noticed after I had created the template. But yours probably looks. Actually, I don't know if I want to use this green. Actually, I don't even like that. All right, so your line probably looks like this, and you see how it's not very uniform, right? That's the only thing I really changed, right? And I deleted the envelope, right? And I just added the borderline, and then set it to 3.0. So you go over here, you look for borderline, you make green none, and you just turn these to black, right? You take the dotted line, you make it a solid line, and then your inputs, you just make this 3.0.
Okay.
3.0. And then now your channel just looks a little bit more uniform, right? It's kind of like equal length in between. That's the only thing I really changed to the template. I didn't do anything else to the template. It's the arrows and everything is the same. Now you could, snazz up the template a little bit and maybe add the breakout signal for, just an added confirmation, because where the breakout signal pops up along with that arrow, it usually pops up in good areas. But sometimes I'll have this indicator on there just so I have a double signal. You can add that to your chart, but I usually don't keep that on my chart. I usually just add it as I go if I need that added confirmation. But that's the only thing that I changed is I took the envelope off and put the borderline on it. So your template should be the same, other than that, it not being green, I mean, I could change this back to, this color and it'd be the same thing as yours. You see what I'm saying? It's the same thing. You should have a 200 linear weighted moving average, on your chart, right? So there's really no big change to the Boss Money template, right? And then that's it, guys. Another thing too. Somebody asked me about this JJFX Legacy. JJFX Legacy. I just created for more so for new members who want to join. All this is it's a mixture of all the best templates, right? Boss Money, the Slingshot template, and then the Scalp Killer template. And then in between here, I have the Slingshot Hybrid, which is basically the Slingshot strategy, but set up kind of like Boss Money. So you're not going to get, all the miscellaneous arrows. You're just going to get the arrows in these key areas in the market at key levels. All right. But you're going to have the Slingshot signal down here. You're going to have the stochastic, the MACD, and the XB4 instead of the stochastic, the AM Major Killer Peak, and the what indicators down here? I don't forgot what's down there. And is it stochastic on the Boss Money? I don't remember which one's on that one. My mind blank. Oh, and the TDI, right? So I'm not gonna lie, this is still my favorite signal. I almost like this signal better than the Boss Money signal or the what do I call that? I don't remember what I called that signal, but whatever. I like this signal a little bit better at times. And then I have Pure Scalp. And the reason why I have Pure Scalp, and it's basically the Boss Money template without the AM Major Killer Peak. And the reason why I have this is because I hate going to the weekly time frame and I have to wait, or the daily and I have to wait because that indicator takes up a lot of data. And another thing is it's very, very confusing when the market is trending. If it's trending, it's going to give you bullish spikes against the trend. And when you see that spike, you're going to want to take a buy, right? If you don't know what you're looking at and you're relying on indicators, you want to take a buy when you see that bullish spike. And I'll show you what I mean by that. Right. right? You see how we're in a downtrend, but we have bullish spikes. I don't like the bullish spikes in the downtrend. I don't mind it once we hit a key level because that's telling me the market's going to go to the upside. But on lower time frames, like a 5-minute time frame, it gets really, really annoying to keep seeing. See how we're in an uptrend and I have all these bearish spikes making me think the market's going to reverse. You know, if you're relying on the indicator, you just hate seeing this, you know. So I have what I created Pure Scalp just so you know, I have these two signals and I'm just pretty much relying on those once the market is trending. And so I can toggle, you know, to the weekly, the daily, and I have to sit there and wait, you know, for the, you know, the system to catch up. So that's what Pure Scalp is. And then you have your Scalp Killer template, which to me is a really good confirmation template, but more so for the higher time frames. If you're on the higher time frame, these signals are money. So daily 4-hour, 1 hour, and then you know you can place big swings with this particular template. A lot of people forgot about this template, but the confirmations are money. Bullish spike, overbought, bearish momentum, and then you got to remember, you know, your price action, push phase, you know, enter the trade, pull back, enter the trade, pull back, enter the trade, and you'll see that no matter what time frame you're on, you're going to get a nice signal based off the price action, right? See that signal? Telling you the market's going to drop. And then the AM major killer peak indicator, it works the best on the higher time frames. If you see a spike like that on a 4-hour, 1 hour, or daily, it's going in that direction. Now, remember too with the signals, guys, these signals are not valid until you get a break of structure, which means if the market made a high and a low and a high, one of these have to get broken. So look, break of structure, pullback, your entry's here, right there, right? So you see a signal, this is not valid until you see a break of structure. Look, break of structure, pullback, your entry's here, right? Just remember that too, guys, with the signals, guys. Don't just, oh, I see arrows and enter the trade. You have to see arrows, a break of structure, a pullback, now they're valid. And look, the green, this arrow is telling you that it's valid, right? Just remember, arrow, break of structure, pullback, it's valid. Not just arrows are valid when you see an arrow. Just keep that in mind too. And that's with the boss money as well on higher time frames. On lower time frames, you can get away with just, you know, entering on a candle, but you know, just keep that in mind. You know, don't just think because you see some arrows that it's valid. You have to see a break of structure and confirmation first to really make that that arrow valid. All right. And then the only other template is the naked template, you know, to analyze your chart. But this is what my version of legacy is because they're all the best templates. The only one that I don't have up here is the Cobra strategy. And the Cobra strategy template, based on what I know about the market now, is still money. I almost think about adding that template back because the way the moving averages on Cobra strategy work, along with that 200 moving average, it really keeps you from trading against the trend. So I may do a little video on Cobra strategy again, based on how I'm teaching the market now, because over the weekend, that's when I really realized that I don't need to be trading buys against that 200 moving average because I'm telling you, if price hits the 200 moving average in a downtrend or an uptrend like it does here, and it can break it, but it has to break it and then stay below it. It's always money if you're going with the trend, right? And you could see that, you know, in these downtrends, right? When the market hits that 200, you get a nice move, right? Hits the 200, you get a nice move, right? So, you know, just keep that in mind. You know, if you see price below the 200, don't try to buy toward this 200. And that's, you learn that anyway, but, you know, when you see an opportunity to buy, you want to buy. This money, you kind of got to let it go so you can get better money, right? And that's just, like I said, like, it's hard to do. It's really hard to do, right? But that's it, guys. Hopefully you guys got some value out of this. And once this uploads, I'll put it in the Telegram so you guys can view it. And that's that. All right. And I'll ask one more time. Does anybody have a question before I hop off here? Anyone? No questions? You all got it? You all understand the structure, right? Right? You understand why this is selling, right? Because we did what? We took money from sellers, we broke structure. What's the next phase? Trick sellers. That's why we're selling. Right? Remember that. All right, and that's it. Let me check in the chat. Upload ASAP, please. Okay. All right. Not many questions in the chat, so I guess I explained this thoroughly, guys. All right. We're gonna end things here, and I will see you guys next week. Also, too, guys, if you have a one-on-one, schedule it. I'm gonna be honest with you guys. I get loaded up with one-on-ones usually Saturday and Sunday, right? People are smart. They will message me over the weekend and load me up for the week. So if you message me during the week, you're scheduling for next week because I'm already booked. So just keep that in mind. Like I'm only one person and there's tons and tons of members. So the only way you can get scheduled during the week is if I have a cancellation that gives me enough time to contact who, was trying to get in, or if I have an open slot that I just didn't book. So just keep that in mind too. Sundays and Saturdays are usually the best days to schedule your training, your one-on-ones. All right. And that's it. Have a good one.